Russia has unveiled its national budget for 2026. After 2 years of record war spending and state-driven stimulus, growth is now collapsing, taxes are rising, and the Kremlin is tightening its grip on the economy. The new budget shows exactly where Russia's money is going and why the country looks to be heading for years of stagnation. In this video, I'll break down what's inside the new budget, how much is going to defence, and why Russia's finances are coming under increasing pressure. As you've just heard, Russia has now set its budget for 2026, and this budget is starting to reflect the reality of over 3.5 years of Russia having to fund both the war in Ukraine and also manage the international sanctions that are now severely reducing the amount of revenue that Russia is earning. This chart shows the breakdown of where Russia is spending its money in 2026. And as you can see from the orange segment, the biggest single area that Russia's investing into is defense and security. It represents 38% of every single ruble that Russia is spending. That is a really big slice. The next biggest chunk is social spending, so basically on care and investment for the people of Russia. That only represents 23%. So the defense and security is more than 50% higher than Russia is spending on its social investments. The economy and infrastructure represents 14% of expenditure. Education and health only represent 10%, roughly around 5% each. And then we've got 15% made up by administration costs and other costs. So you can see the focus of where Russia is investing the majority of its income. Now, just before we go on any further today, I want to talk to you about today's sponsor, investing.com. Investing.com offers you a huge amount of data. But one of the most exciting things about it is that you can harness the power of artificial intelligence to try to beat the markets. Now, if you've been following my channel, you'll know that I've been using the AI that investing.com provides, and I've been doing extremely well from it. In fact, I was doing so well that when I made a video and posted it onto YouTube, YouTube thought that it was some sort of spam promotion because it didn't like the percentage growth that I was showing after just 2 months. So if you're interested in utilizing the power of artificial intelligence to try to boost your performance in investing, then you need to go to investing.com and have a look at its pro picks, because you will get a list every single month of the stocks that AI has selected that it believes will beat the market. And if you don't believe that it can do that, then please check out my videos and have a look over on Patreon, because you won't find them on YouTube, because YouTube doesn't believe that you can achieve this sort of performance. So if you're interested in using investing.com, the great news is that they're having a 4-day flash sale where you can get 50% off their annual plan. However, Joe Blogs viewers will also get an additional 15% off. So if you're interested, scan the QR code on the screen now, or click the link in the description below to start your investing.com journey. And if we have a look at this chart, it compares what's been going on since the start of the war in Ukraine in terms of how much is going into civil spending, so investing into the economy and growing the Russian state, versus how much is going into defense and security. So what you can see here is that back in 2022, Russia was spending around about 15% of its annual budget on defense and security. And at that point, over 70% was being invested into the economy. However, as you can see, over the last 3.5 years and into the forecast for 2026, the amount being invested into defense and security has increased significantly at the expense of the Russian economy. And of course, we talked about this before. If you're putting a lot of your money into defense and security, that isn't going to yield future growth. That's not actually bringing anything in terms of jobs and employment and income and investments. So long term, this is going to be damaging to the Russian economy. Russia's budget for 2026 assumes that it will achieve 1.3% growth in the year, which is a significant reduction from the 4.3% that was achieved in 2024. So the Russian economy is seriously slowing down. And the level of investment that Russia is making into the economy is also going down. So obviously, if you're investing less, then you're going to get a lower return. So what this looks like is the Russian economy is now heading into a prolonged period of stagnation. Now, in terms of the deficit, the forecast deficit for 2026 has been set at 3.8 trillion rubles, which is around 1.6% of GDP. And Moscow is raising the VAT income by increasing VAT from 20% to 22%. That's the first major hike in VAT that's been seen for a long time. And that's going to impact on everybody in the economy because VAT is a tax on purchases. So whenever you buy something, you're now having to pay 2% higher. So that will feed through into inflation. It will also impact on lots of different companies in Russia because as they're purchasing in all of their materials that they need to produce things, it's obviously going to impact on those costs. And then the sales prices going up potentially could mean that there's lower demand and reduced revenue. So the reason why Russia is doing this is that they want to reduce the deficit from the 1.6% this year and forecast for 2026 to 1% going forward. Now, one of the things that Russia is prioritizing is defense and security spending. We looked at it at the pie chart in the beginning of today's video. It represents now 38% of total spending. It's the biggest single segment, and that equates to 7% of GDP. And as we've talked about, that doesn't really yield anything in terms of growing the economy. That is dead money when you're putting it into defense and spending. Now, obviously, there's a reason why Russia is doing that because of the ongoing war in Ukraine. But as with any budget, you have to juggle the numbers around. So if you're increasing the amount you're spending on defense, it means that you're cutting back in areas such as health and education and infrastructure. Now, in terms of the assumptions within the budget, it's expected that inflation will come down to 4%, which is actually quite an aggressive reduction from the current 8% level, particularly when you take into account that the sanctions are still in place, which are causing Russia issues with regards to sourcing enough equipment and products, and therefore is pushing the price up of everything that they're buying. And also we're starting to see the ruble weakening again. So halving inflation, I think, looks quite ambitious. In terms of the assumption on oil prices, the budget assumes that oil prices will remain at $70 per barrel, which again could be potentially quite aggressive given the fact that the global economy is slowing down and we're seeing pressure on oil prices. And OPEC Plus is also increasing the supply of oil. So whenever we get an increase in supply, it usually reduces the global price of oil. And Russia is also expecting that its oil and gas revenues will continue declining in the period between 2026 and 2028, which I think is probably realistic. Now, in terms of what challenges this budget represents for the economy in Russia, well, the first one is that interest rates are still extremely high. They're sitting at 17%. They were reduced on the 12th of September from 18% to 17%, but 17% is still off the scale compared to where interest rates are around the rest of the developed world. And those high interest rates will deter both individuals and companies from borrowing money, and that means that businesses will hold back on their investments into their companies. If you're running a factory, for example, and you needed to borrow to open up a new production line or to create a new product, for example, you're less likely to do it if you're having to borrow at rates above 20% because the banks will apply a margin on top of that base rate of 17%. So these high rates are going to hold back investment. And also the private sector is being crowded out by the state's focus on the war in Ukraine. The state is investing heavily into those businesses that are assisting with the war in Ukraine, this switch to a wartime economy. And that means that the private sector isn't receiving the same level of support from the state, and so it's not growing as rapidly as it would be. And the other issue, I think, with regards to high interest rates is that consumer confidence is low at the moment, and people are wanting to keep hold of their cash because they just don't know what's happening with inflation, and they want to make sure that they don't run out of money. One of the other major challenges that Russia is facing at the moment is what's going on with its oil and gas revenues, which are down around 25% year on year. And if you've been following the channel, you'll be aware that Ukraine has upped its drone attacks on Russian infrastructure, particularly on the refining businesses. And that's caused a capacity reduction of up to around 40% at the moment. So these are major challenges for Russia, which still is highly dependent on oil and gas. And of course, the sanctions are also ramping up. The USA are trying to stop India and China from buying Russian oil. They've already applied a 50% tariff on all Indian imports and have told the European Union to follow suit. And the European Union, in their latest round of sanctions, have said that they will clamp down on any buyers of Russian oil. So all of this is going to make it much more challenging for Russia to continue pulling in the same amount of revenue. And of course, if it doesn't, it will have less cash to spend. And so the deficit will get even larger. And that deficit is currently being funded by the National Wealth Fund, which is now dwindling. The increase in VAT from 20% to 22% is likely to add 1% directly to Russia's inflation. So that's going to be an issue for a budget which is assuming that inflation is going to come down to 4%. I'm not entirely sure how Russia is going to achieve that. But that increase in VAT will reduce the amount of spending money that everybody has because prices will go up across the board. And this is going to apply further pressure to an economy that's already overheated as a result of wage increases. The switch to a wartime economy has forced up wages all across those businesses that are being sponsored by the state. And of course, that's pushed up the whole market because as people leave their existing jobs to go and join those state-sponsored companies, the companies that are losing staff are having to offer higher wages to attract in replacements. And so this spiral has really caused major problems. And the increase in VAT is going to add fuel to that fire. So all of this makes it more challenging for Russia to be able to achieve the budget and the assumptions that it's put out for 2026. So what's the summary and conclusion today? Well, I wanted to post this video because I think the 2026 budget is really quite interesting that Russia has presented. As we've seen, the vast majority of its increased spending is going to defence and security. It now represents 38% of every single ruble that Russia is spending as a state. So that is a huge figure. That is significantly larger than most other economies around the world. So this represents a problem because Russia's income is falling. So it's increasing its spending at a time when it's got less money to spend. And the reason why the income is going down is because oil and gas revenues are shrinking at the moment. Firstly, there's the sanctions, which are applying further pressure onto Russia. There are fewer and fewer buyers for Russian oil. And Donald Trump and the West are trying to close down the Indian and Chinese purchases. And if that happened, then Russian budget would be completely decimated because if it lost the volume of oil that it's selling to those two countries, it would actually have to close down some of its production because Russia simply doesn't have anywhere to store that oil. So if it doesn't have buyers in the international market, it would have to stop producing. And that could be devastating for the Russian oil industry in the long term because you can't just switch oil facilities on and off overnight. It doesn't really work like that. So Russia has presented its budget hoping that it will continue selling to India and China. But if they get closed down, then this budget will be completely blown out of the water. But the figures that we've seen in today's budget show that Russia is now expecting growth to be far lower in 2026, down to around 1.3%. But there is a question as to whether or not that growth will be achieved because the oil and gas facilities are currently being attacked heavily by Ukrainian drones. I've covered this in separate videos. But refining capacity is currently down by around 40% as a result of the strikes that have been taking place. And it's likely that those strikes will continue. In fact, Ukraine is ramping up those attacks. And it's also attacking infrastructure within Russia. So Russia is assuming that everything will carry on as normal in terms of its income, but I think there's a big question over that. Now, in terms of its taxation, it's increased VAT for the first time in many years from 20% to 22%, and that's likely to drive up inflation by 1% on its own. But the budget assumes that inflation will come down from the current 8% to 4%, so that's going to halve. Well, Russia has actually had a target rate of 4% throughout the whole of the war in Ukraine, and we haven't seen inflation coming down anywhere near those levels. Well, it did come down briefly for an unexplained period, but didn't last for long, and as I said, I don't really know how they managed to do that. It wasn't really explained to anybody. So ignoring that brief spike in inflation where it dropped down, we've seen inflation pretty much at double-digit levels for most of the war. So a target of 4% for 2026 looks very ambitious, particularly when you factor in the increase in VAT and everything else that's going on in the Russian economy with regards to the increase in wages as a result of the switch to being a wartime economy. So the overall summary of today's video is that the budget presented by Russia for 2026 shows that its income is falling, its expenditure is continuing to be focused on the war in Ukraine. Taxes are now rising, and all of this is putting further pressure on the Russian economy. And it looks like Russia is now forecasting a long period of stagnation, where the economy will be growing very slowly at the same time as inflation remains high. So we're looking at a period of stagflation. And if you follow economics, you'll know that stagflation, firstly, is very difficult to break out of, and secondly, is really bad news for the economy. So this tells us that the war in Ukraine has really damaged the Russian economy, and it looks like that damage is going to last for a very long time. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up and subscribe if you haven't done so already. Thank you so much to everyone that's supported me, particularly everyone that's recently come across to Patreon, where you can see my videos advert-free. You'll see them earlier than they're posted on YouTube, and also you'll see videos that are not being posted on YouTube, such as the AI shares experiment that I'm running at the moment. That's the reason why I can't post them here, is that YouTube actually deleted that video and issued me with a warning. So unfortunately, I can't continue sharing those videos with you. But if you'd like to see them, have a look at Patreon. But thank you so much for watching this video all the way through to the end. And here's something to put a smile on your face.